Hey guys, welcome to the video. Welcome to the live. We are live today, guys. Good to be here. Glad to have you here. As you come into the chat and into the video, guys, please do me a favor and let me know where you're coming from. What city, what state, what county in that state, what country, right? Where are you coming from, guys? Let me know where you are. And we're going to kick this thing off today, guys. Happy to be here. Glad to be back here. And we're just going to talk today, guys. Our conversation today is going to really revolve around the hidden cost of high inflation. Okay. We are going to talk about what's going on with inflation. Why is inflation? Okay. What are some things that happen when inflation gets high? And I'm going to read something to you guys, an email to you guys in just a moment. There's a lot of hidden costs to inflation, high inflation, right? So I got an email yesterday from my homeowners insurance company. And I'm going to start this live off in just a minute reading this short email from my homeowners insurance company. This is going to illustrate why I'm doing this live on this topic. As you come in, guys, hit the like button for me, the thumbs up button, and let me know again where you checking in from. What county? Maybe it's another country. I'm sorry. What continent are you on? Let me know if you can hear me okay. Give me a thumbs up if my microphone is working okay, guys. I've had some mic issues in the past. So if you can do that, give me a thumbs up. Let me know you hear me. And looks like we got Mike checking in from where? Pennsylvania. Justa, good to have you here. Kenny from Chicago, Illinois, Cook County, Illinois, where they're having a lot of issues going on and a hotbed issues with my immigrants that are right there in Chicago. B. Moore, Baltimore, Maryland is in the house. Good to hear you. Paducah, Kentucky. Good to have you here. Boneyard Lawn. Guys, let me know with a thumbs up if you can hear me okay. I am Rich. Good to have you here. I'm just shouting out you guys who tell me where you're from. Lancaster, Pennsylvania. LA is here. East St. Louis, East Boogie. Good to have you in the house. Merlin's in the house. Aurora, Illinois. Broken Arrow, Oklahoma. That's near Tornado Alley down there, right? Hey, from Atlanta, the ATL, Memories in Action. Good to have you. Listening from Canada, Patty, Canada. Wow. South Africa's in the house. Wow. We get them from all over the country. So, guys, I had to log off or get done with my job and had to come over here and hang out with you guys at 4:30 p.m. Central Standard Time on Thursdays. Let's talk about the hidden cost of high inflation. And I'm going to read this email to you guys. Waynesboro, Georgia. Georgia is in the house. Kind of a southern accent. Bryant from Lantana, Florida, right near the beach. Good to have you here as well. Barbados is here too. Miguel from LA. Good to have you as well. Stockton, California. I think that's a little bit further north, right? Or is that Stockton in the middle of California? I think it is. So we got them from all over. Listen, guys, if you can hear me okay, give me a thumb. Yep, got a thumbs up from LA. Thank you, thumbs up. Appreciate it. You guys can hear me. Excellent. So let's have this conversation, man. And do me a favor as you come in, guys, smash the like button for me. Hit the like button. Let me know. Let me take these off. Hit that like button for me, guys, and let me and that sends a little signal to the YouTube algorithm, right? If you hit the like button, if you're not a subscriber and the first time you're checking in, welcome. Good to have you here. I'm here at least 2 or 3 times a week doing lives, talking about all things money. Today is all about money. It's all about the hidden cost of these rising prices. So hit the like button. And also check out in the description box. I got some things down there. I'm not even going to go over that right now, what's in the description box. We'll go over that later, right? Let's see here. Whoop, whoop. First live with you. Chris is Tasha. I'm not sure what that means or what that says. Let's see here. Money Bags from Long Beach. Good to have you in here as well. Appreciate you here, Tony Gold. And then Pam is in the house. Pamela Morrell from Atlanta. Good to have you. Looking forward to speaking with you, Pam. So let's have a conversation. Here it is, guys. I'm going to read this email from my insurance company, and this will illustrate the trickle-down effects of high inflation. But I want to be clear that I want to be sure that we're clear about inflation. Here's what the email said, and I'll actually I'll actually read the email if that's okay with you guys, all right? Because I didn't memorize it. The email for this is from my homeowners insurance. It says, hello, my name, right? I wanted to drop you a quick note that your home policy is scheduled to renew on May 31st, 2024. I'm reaching out because I would like to review the upcoming changes and discuss some available options with you. You should receive a letter or email with a link to your renewal offer for your homeowner's insurance over the next few days. With your upcoming renewal, here's the kicker. You're going to see, why am I so dark? What happened? Oh, I'm getting back lighter again. Let's see. It says you're going to see an increase in 20.48%. As you may be aware, there are many personal and industry factors that may be impacting the changes to your homeowner's insurance policy premium. Accordingly, it will be helpful for us to touch base and talk about options available to you. My staff and I are here to answer your questions any questions you may have and discuss coverage options that may apply to your specific situation. We look forward to meeting with you soon. Thank you for choosing here's the deal. My homeowner's insurance is going to go up 20%, almost 21%. Crazy, 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 crazy. That's a lot. That's a ton. And so as I begin to kind of prepare for this video, this live, I said, you know what? What's happening here with insurances? Why are homeowners insurance rates skyrocketing right now? What's happening with homeowners insurance and why is insurance so high? So I want to spend the time on this live digging into the hidden cost of high inflation, which that result is much, much higher insurance premiums all across the board. Car insurance, health insurance, homeowners insurance, it doesn't matter. Everybody's insurance is going up right now. Everybody. And it's going 20% is mine. Now, I don't know about you, your home or your car. 20%, an increase of 20% is incredible to me. It's like, what's happening? So I begin to do a little research, guys. I'm thinking 21% is crazy. I begin to do a little research, start checking around, and I want to share with you what I found out about insurance, right? Apparently, it's all industries, everybody's raising their insurance premiums, right? I put a poll question in the community tab of YouTube this morning. Before I started my job, I put a poll in there. And I said, what did I say in the poll? Let me just read the poll question and give you the results, okay? The poll question was, have you noticed an increase in your insurance premiums on your home, car, and healthcare in the last 2 years? I got 400 responses so far. 400 responses, 81% said yes. 8% said no. 7% said, yes, I've recently switched insurance plans. Only 7% have recently switched. And then 4% said no, but I need to check it out. So that's 4% of 400 people is what? 16 people. So 16 people, hopefully I alerted these 16 people to go and check your insurance premium. Okay. But 81% said, yes, my insurance premium has increased. And that went right along with exactly what I was researching. That, yeah, most people's insurances in America have skyrocketed. See, inflation doesn't just affect gas, food, right? Those things that we can see right off the bat. High inflation over a sustained period of time has a trickle-down effect on all areas of our life that we spend money on, all areas. So I want to dig into this question, right? Of why, specifically, why are insurance premiums ridiculous at this point, right? Somebody said buy insurance stocks. Exactly. What's up, Rhonda? Good to have you here. Let's see. The excuse is always the cost of replacement parts. We'll get into that. it's an important topic. Appreciate that, Mrs. Moore. It's an important topic because we all, 95% of us sitting on this chat right here, or 99% of everybody's going to watch this video is going to be affected by the cost of insurance. That eats into how much, the food you can put on your table every day, right? The cost of insurance. That eats into all different types of our personal finances. So we got to know and figure out what's going on, right? Let's see. Are we still freezing? I wonder why my video is freezing. I'm tucked in right here. You guys help me out here. I got some of the weakest yeah, I always have some weak connections. So you guys let me know how my connections are. I thought I had a strong connection. I thought I had that fixed, and I've been working on it. But we'll see what happens. You guys keep me posted, and I'll just keep talking, even if the video's freezing. Even if the video's freezing, I'm just going to keep talking because I could do this as a podcast for real. So let me see. Maybe there's something I can do to fix it, but we'll just keep rolling. Okay. Let me remove that banner at the bottom. There's so many moving parts when you're doing a live stream on YouTube. It's so many moving parts, man. There's so many things happening in the background you guys can't see. So, but let's keep going. Let's see. It's not a big deal. Let's see. Boom, boom. Is the video? I'll keep moving. See if it's freezing. I wonder if I change this. Let me change the setting real quick on something. See if that makes a difference. Boop. Now you guys tell me if I'm still freezing, okay? And I just changed a little video setting, and somebody jump in the chat and tell me if I'm still freezing. Okay, good. Let's see. Audio's great. Video's acting funny. You guys tell me if I'm still freezing. I'll keep rolling. Okay, so let me keep talking. Now, here's the deal. Inflation affects everything. Still freezing. Man, okay, so it wasn't that fixed. Now I'm going to fix it. I'm going to see what I can do, guys. Just bear with me. If I can't fix it, it's telling me it might be a connection with my Wi-Fi or something like that. I thought I had pretty good Wi-Fi here in the house, but I guess not. But let me change back to where I was because that's obviously not the issue. Bap, I just changed back. Let's see here. Okay, so yes, I don't have a face made for the camera anyway. So if I'm freezing, that's probably a good thing, right? I got the right voice for the camera, but not that right face for the camera. At least I don't think so. All right. So inflation affects everything. There's a production change, right? Starts with the cost to, okay, well, here's the thing we got to know about why inflation affects everything is because everything starts with something as simple as extracting raw materials from the ground. There's a cost to that. And if everything increases in terms of price, the cost to even just to start to extract those raw materials goes up. And this inflation thing is not specific to America. So maybe you import goods, whatever it may be, the cost to even get stuff out of the ground has gone up, right? Cost of shipping raw materials has gone up. Cost of buying raw materials has gone up. Cost of processing and manufacturing has gone up. Cost of shipping to wholesalers, shipping to retail stores, everything has gone up. So what that means is the end result is the cost of selling the end product to me and you is going to go up as a result, right? Not to mention the cost of storing goods. And of course, that means the cost of insuring goods. But the problem is that what happens with inflation is everything doesn't happen all at once. Sometimes it happens slowly over time. And to me, it appears that insurance has been doing this for the last year and a half, but insurance is slowly one of the last things to catch up with inflation, high inflation, right? So in the last year or two, inflation has skyrocketed, kind of lagging behind the price of bread, the price of milk, or whatever, the price of manufacturing. The insurance is just now catching up with everything else. right? So when we talk about the hidden cost of inflation, we're talking about we're talking about these things that ultimately feel the heat down the road, such as insurance. And that's why, and maybe my insurance went up 6 months ago, but I'm just now renewing it. It's now starting to show up in terms of insurance, health, car insurance, especially car insurance, big time, right? Some people want to get, I've read several things that says some people want to get rid of their extra car so they don't have to pay the high insurance premium just to have it, right? But let's just zone in on the insurance, right? When I got this email yesterday from my homeowners insurance, I was a little shocked, to be honest with you, because I'm thinking, you know, initially, why is insurance going up? What's going on with insurance? Why is insurance crazy? And then I had to start thinking about it. It's because inflation is crazy, had been crazy, right? To this big, sort of what I've read is that to this point, big insurance companies have been sort of quiet about what's really driving rates up, right? Inflation is definitely a big part of it. We know that. But because everything costs more, including, cars cost more, for example, with car insurance, cars cost more, the car repairs cost more, parts for cars cost more, everything costs more. So if it costs more for everything, it means to repair a car is going to cost more. And so the insurance companies are passing that cost to us. So they say, right? So they say, right? Some folks would say that's not true, right? Hey, looks like I got a better connection now. Fantastic. Right? So we'll see what happens with our connection. Let's hope it goes through okay. All right. Are some insurance companies greedy? Yes, but listen, guys, inflation is a little more complicated than what we always think it is. I always say on this channel, you got to look at inflation from both sides of the coin. I mean, let's look at something. Here's a mouse in front of me, right? This mouse right here, this mouse, I usually use my hat as an example. Let's use my hat. No, let's use the mouse. This mouse right here, guys. I don't want to get into the example. We'll get in that. Let me share my screen with you guys. I want to share my screen with you to show you something real quick. And if you're not on YouTube, go over to YouTube, Smart Money Bro, YouTube, and I'm going to share my screen with you a little bit to read a recent article I came across that helped me understand some of this a little bit better. And I always, you guys never mind me sharing my screen. I don't think, but I like to share the screen sometimes. Let's see here. Rising home insurance rates predicted in 2024. I think this was written a month or two ago. Home insurance rates. Let me see. Let me make that a little smaller for you guys, or bigger. Home insurance rates are rising across the country. Which states are experiencing the highest premiums? Read on and find out. Okay. This was actually updated April 2nd. So this is a few weeks ago. Soaring premiums have been one of the biggest challenges facing homeowners across the U.S. Between 2021 and 2023 alone, homeowners insurance rates risen almost 20%. The new data gathered by Insurer, that's what it's shown. Still, the price increases aren't showing signs of letting up. Analysis by the online insurance marketplace predicts a 6% jump in premiums this year. Worsening weather conditions brought by climate change can push up the rates even higher next year. So now this article talks about some weather conditions, right, for homeowners insurance. So where will homeowner insurance rates increase the most? Insurance business digs deeper. How much will home insurance rates increase? The firm's home insurance projection report foresees a 6% increase in annual premiums in 2024. The increase will put the national average at $2,522 at the end of the year, $2,522. With climate experts expecting a devastating hurricane season, home insurance costs are forecasted to surge even higher next year. All right. Homeowners insurance premiums have been rising the past several years. Homeowners paid between 2021 and 2023, in those 2 years, homeowners paid an average of nearly 20% more for coverage. And as we go through, here's the top 10 states with the most expensive home insurance rates in America. Florida, and I think Florida's Hurricane Alley, right? Louisiana, Hurricane Alley. Oklahoma, Tornado Alley. Texas, what does Texas get? Rain and things like that. Mississippi has some of the highest homeowners insurance premiums in the country. And then you got Colorado, Nebraska, Alabama, Kansas. And some of these are in that Tornado Alley that gets a lot of Arkansas, Kansas, etc., to Oklahoma. And then some get the bad weather in terms of hurricanes, right? The top 10 states with the highest homeowners insurance rates share one thing in common. They're prone to extreme weather events. Just wanted to share that with you because you know what? I saw that and I said, okay. I didn't think about that, but okay, you got me. I didn't realize that. Okay, weather could be an issue. Got you. So there's inflation, there's weather. Now, when it comes to car insurance, we know that things like your driver profile, age, all that good stuff, where you live, your age, your driving record, all those types of things when it comes to car insurance influences what you pay for car insurance. But rising car repair costs, again, that's the inflation, is also a big issue when it comes to cars. Now, why is insurance rates up? Let's keep that conversation flowing because there's some other things I want to point out to you guys. Hey, California's in the house. Just checking back in the chat. Let me just do a pause break real quick, guys. Check out Mint Mobile down in the chat. That's my partner on this, along with Streamyard, which you're watching this on Streamyard. But check out Mint Mobile if you want to save some money on your cell phone usage, cell phone plan. Mint Mobile is down in the description box. Click on that if you're interested in getting it. I like it. I use it. I like to partner with them and just explain to you guys that you can get some real good discounts on your cell phone, and it's still using the world's largest 5G network. So you're not getting drop calls and things like that. Really like Mint Mobile. Also, there's 24 Laws of Money, my ebook that's free. It's in the description box as well. And also, if you're not a subscriber, please consider subscribing. Also, hit the thumbs up button for me, guys. Smash the like button for me. I really would appreciate it. Did my camera go off? You guys help me. All right. So let me see where we are here. Boop, boop. All right. We're in good shape. All right. Let's see here. You guys let me know how my connection's working too, guys, if you can. Give me a little thumbs up if I'm getting a good connection right now. You guys can tell me in the chat. So, appreciate that. The Latin Inferno. The Latin Inferno. That's pretty new. That's a pretty neat name. Thanks, Clint. Appreciate that. So, thank you, Mrs. Moore. I appreciate that as well. So let me plug into another. Not plug into another, but let me actually bring up another article real quick. I want to continue the conversation. So let me bring this one up real quick. I thought this one was pretty neat because it explains some more of what we're talking about. This is last month. Everything is rising at a scary rate. Why car and home insurance costs are surging. And you guys should be able to see that. Yep, you can see it. Ezra Croft has never filed an insurance claim on his house in Raleigh, North Carolina. It's not close to a stormy coastline or the California, fires, anything like that. So Croft was surprised when his annual homeowners insurance premium shot up $1,600, up to $1,600, $700 more than what he was paying a couple of years ago. He said, "I'm a middle income guy." This is just a story on NPR. It says, "I'm a middle income guy, don't make a ton of money. At this point, I'm teetering on the point of inaffordability. Similar complaints can be heard all over the country. On average, insurance companies sought to raise homeowners premiums, says more than 11% last year on this article. It says auto insurance premiums are climbing even faster, far outpacing overall inflation. Let me scroll down a little bit. Why insurance costs are surging. Insurance companies insist they're playing catch up after 2 years of big losses. For every dollar in home and auto premiums they collected last year in 2023, insurance companies paid out an average of $1.10 in claims and expenses, according to the Insurance Information Institute. Nobody wants to have a higher price bill, says Sean, whoever, the Institute CEO. But he added, companies need to price insurance according to the risk level that's out there. Inflation is partly to blame for those big payouts. The cost of fixing or replacing damaged homes and the cost of car replacing or fixing damaged cars has jumped sharply in recent years as a result of rising labor cost and rising material cost. Even as those prices have started to level off, though, insurers are having to contend with mounting tolls of natural disasters, and not just in unusual places like Florida and California. Last year, there were around 24 severe storms in the US. So, again, I'm getting to the issue here, right? I just want to go over a little pieces of that article, guys, because I like to kind of point those things out to you as I come across them. So, the hidden cost of inflation, we're looking at the rising cost of materials, right? The rising, and that's affecting homeowners insurance, affecting auto insurance. And so that's another piece to it, right? You got so I'm just pointing these things out to you guys to show you. And this was my education too, right? I learn all the time, just like all of us, right? But I had to do some research. When I got the email, I said, look, something's wrong. What's happening? Oh, thanks for that. Heads up to you. So let me see here. It seems everyone in Columbus has some kind of car damage, including me. The insurance company didn't offer enough to pay for repairs. What the heck, said Jackie. So that's what we're facing, right? As the cost of these building materials for houses, the cost of property, the cost of labor, the cost of repairs, the cost of maintenance, right? All these things are adding to the ultimate end, which is us, the consumers. As consumers, listen, we always got to know this, guys. Very important to know. As consumers, the trickle down is always going to affect us no matter what happens. And this is where I don't want to dig too deep into politics, but we have to realize no matter if you sit on the left, sit on the right, sit in the middle, sit in the other seat, when you're talking about social programs or things that's going on, inflation, whatever's happening in the economy, the end user is always going to bear some some expense, some rising costs. And we as consumers, we are the end users. But it's interesting as the end user to kind of know how that happens and how it comes about. Because when I first saw that email, I said, whoa, what's going on? Why are these insurance companies? That's the first thing that came out of my mouth. But then the second thing that came out of my brain was, okay, this is starting to make sense. The trickle down effect of high inflation ultimately trickles down to insurance. Now, don't get me wrong. Insurance companies are for-profit entities, right? They want to make a profit. Insurance companies want to make a profit. So insurance companies want to actually increase premiums for their own profitability as well, right? Not to mention, yeah, they got to cover these natural disasters. Yeah, they got to cover all these increases in, the price of repairs and maintenance and equipment and products and all that good stuff. They got to cover all the cost, right? But they still want to make a profit. So then the other part of me said, okay, are they in? We know that there's natural disasters and everything costs more, inflation, but is there another piece to this thing that says, you know what? Maybe insurance companies also want to increase their profits along the way, right? We've all been thinking about that, but that could be a piece too, right? So we got to think about, as consumers, I always want to bring us to a point on this channel on YouTube where as consumers, we're looking at the totality of the whole picture of what's going on, right? Not just, oh, my insurance premium is higher. You should be researching and figuring, okay, why is it higher? Looking at things not from one dimension, but from two or three different dimensions, right? That's going to make us a better consumer, right? Let me jump over here in the chat. Let's see here. Approximately 13.7 million. We're talking about illegal aliens. Let's see here. Somebody said Bidenomics, food inflation caused materials inflation. People need more money, which causes insurance. Inflation is very, very interesting. The thing that we don't really understand or talk about much about inflation, I'll talk about it real briefly here, real quick, is that inflation is not just oh, the prices go up. Inflation is caused and kind of buttressed by the fact of the money supply. See, People forget about the supply of money. As the Fed, the Federal Reserve, as they throw more money out into the economy, right? This is what happens, guys. I'm selling this hat right here for $5. I'm selling my hat for $5, right? You as a consumer, you only have $4.50, $4, $5. Well, guess what happens? When the Fed tosses a whole bunch of money out into the economy, they toss a whole bunch of money out in the economy by printing money. Basically, it gets more detailed than that, but I'm giving you the big picture. When the Fed prints money and puts more money out in the economy to stimulate the economy, yeah, you only have $4, but guess what you can do to get this $5 hat? You can go borrow money because if they can lower the interest rates, and you can go borrow money to go buy my hat at $5. But guess what? I'm a business. I'm a business. I want profit. I'm an insurance company. I'm a hat maker. Whatever I am in business, I see that the Federal Reserve threw a whole pile of money out into the economy, and you can go out and borrow that money to get my hat. Guess what? My hat ain't going to be $5 no more. Now, because the Fed knows your spending behaviors and your spending patterns. They study it like they study lab animals, right? They know you. So they know if they throw a whole bunch of money out in the economy and make it cheap to borrow, you're going to go borrow it to go buy the car, to go buy the hat. And guess what? You're going to go buy this hat, but guess what? Now I know in a whole bunch of money, I'm not keeping the hat at $5. I'm making the hat go to $5.50, $6, right? And if they keep throwing money out in the economy and keep making it cheaper to borrow, guess what? Now my hat's going to be $10 because I had to go hire 5 or 10 people to go help me manufacture these hats because everybody wants this hat. High demand. I'm going to raise my prices. You got the money to get it, and the Fed is throwing money out there to give it to you. It's called quantitative easing. Guess what happens? All of a sudden, the Fed says, oh, inflation is big. Well, it's big, and prices are rising. Hat makers are raising their prices. Car parts manufacturers are raising their prices. Wood manufacturers are raising their prices because you put a lot of money out in there to help inflation go up, right? And now you stimulated the economy. Everybody's buying, so I'm raising prices. So inflation is an end result of other things, right? Companies just don't raise. I wouldn't raise the price of my hat from $5 to $10 if I knew that you couldn't afford it and wouldn't buy it. But because you could afford it, and you would buy it, then I'm going to raise it. I'm in the business to make a profit, and I got to feed 10 families who work for me. So I got to make some profit, and I got to feed them. I'm raising my price. That's business, right? That's why we have to slow down and look at the big picture so we can understand our role as consumers. Perhaps just because we make more money and just because the Fed makes money cheaper to borrow and prints money out there for you, don't necessarily mean you got to take the bait. But people take the bait because we live in a consumption society. And so now the money's out there. It's cheap to borrow. Interest rates was 1% and 2% and 3% for homes and for cars. You were out there taking the bait. That helped inflation go up. So they put money out there out there for you to take the bait, and you took it. We took it. But now, guess what they've been doing over the last year and a half? Inflation is out of control. CPI inflation hit 9%. Core inflation hit 6%, 6.5%. We got to take some of that money out of the system. That's called quantitative tightening. They take money out of the system and make the little money that's out there in the system more expensive to borrow. And when that money's more expensive to borrow, what do you do as a consumer? Because they know you like a lab rat. You stop borrowing so much money. And guess what? Now I can't keep my hats at $10. I have to maybe lay off a worker or 2 or 3 or 4, and I got to lower my hat price back down to $5 because you no longer have that big pile of money that the Fed put out there for you to go borrow from. Now you say, you know what? That hat is $5 and I only have $4.50. I can't go borrow money to get it. Guess what I'm going to do? I'm going to lower the price down to $4.50. And now you see inflation coming back down. And because the Fed has now stopped just printing money to put it out there in the system, they start taking some of that money back, getting rid of that money, that free money, making it more expensive to borrow money. raising the interest rates, right? That's called quantitative tightening. The Fed is controlling it by controlling the amount of money they have out in circulation that's out there. And the one you always hear about is Fed funds rate. But the Fed funds rate is only 60% of the equation on how they control the whole thing. The Fed funds rate is one piece, but the other piece is the quantitative easing or the quantitative tightening that they're in the habit of doing to control us as consumers, right? It's like they're puppets, they're puppet masters, and we're on a string. Up, interest rates low. Let me go borrow money. Up, interest rates low. Let me get that hat. Up, I got a stimulus check. Let me go spend it. They're just controlling us and manipulating us. And so we got to know it as consumers, right? Everything is connected. And now we're seeing a trickle down, and of all of this high inflation, it's now hitting us in the insurance pocket over the last year or so, right? That's the hidden cost of inflation, right? That's the hidden cost of inflation. Rising costs of materials are predicted to affect the home insurance and auto insurance, right? Materials like repairs and so forth, right? Something to think about. Let's see here. Let's go to the chat. It's all connected. If suppliers have to pay more for food, then they charge more for their materials, then insurance goes up. Zach, you got it. You got it right there. Grayman said all those stimulus checks are coming back to haunt us. Sort of, yes. Too much money in circulation, absolutely. Right? Now we got quantitative quantitative tightening, QT. Right? Insurance companies want to maintain their margins. Absolutely, they want to maintain their margins. Right? They don't want to lose money. And how do they maintain their margins? Increase the premiums to me and you. Right? Artificially boosting the economy by lower interest rates, more cheap money to borrow, and shutting down the country for 3 months, printing 40%. That's what the Fed does. That's exactly what the Fed does. They say they have two mandates, right? What is it? Control unemployment, keep everybody maximum employment, and control prices, right? And they have these different ways they go about to do it, and we're just stuck on one of them, which is the Fed funds rate. Right? The interest rate. That's just one thing they do. But they have a whole balance sheet that they control and manage these QT policies or QE policies off of, right? In terms of their bonds, letting bonds roll off and all that good stuff. Let's see. In Australia right now, the two big grocery chains are facing flack for price gouging. Insurance companies probably do a little price gouging too. Thank you, Vanessa. Hit that like button, guys. Smash that like button for you. Somebody said they may not lower the Fed funds rate to the election time. Perhaps. Now, the Fed very clearly comes out and they say that they try to be politically neutral. This is what the Fed says. I need you guys to understand this one thing, though. The Fed is the Fed is almost a communications company, right? That's a big part of what they do. They're almost a communications company, because they have to measure their words extremely careful. When's the last time you heard a Federal Reserve chair go off script? That would be very, very rarely. Maybe 4 or 5 years ago. They don't go off script. All of the ones that are heads of their particular districts, I think is there 12 districts? All 12 of them, including the Fed chair, Jerome Powell, who's the head of the New York district, they don't go off script. They have a script. They're trained in how to deliver messages, in what to say, what not to say, and so forth. They're almost a communication company because they have to put out certain things, not just things, but the way they say things. Because the economy hinges on a lot of what they say, right? So you got to be careful you got to listen, but you got to listen with sort of a third ear, so to speak, right? When you're listening to the Federal Reserve chair, or when you're listening to one of the heads of the other 11 districts, right? So there's other things that affect insurance. Let's think about insurance. If you have like an an unpredictable increase in the cost of goods that are going to affect the insurance company's reserves that they have. That's going to cause their premiums to go up, right? It's going to cause their, it could be anything in any industry. We're talking about homes and car insurance, but you name it. You're in the car insurance, you're in the car business, and the cost of leather goes up. The cost of leather goes up, then it's going to reduce the insurance company's reserves. And when those reserves get reduced because they got to pay more for leather when there are repair issues, then guess what the insurance company is going to do? They're going to increase the premium, right? Maybe there's some type of labor issue, right? If the cost of labor increases, when you hear the Fed talk about wage rates and wage rate increases, if wage rate increases get out of whack, and now employment and labor cost more out of the sky blue, that and you have a reduction in your skilled labor, a reduction of productivity, insurance company may turn around and put that and increase premiums by a 0.0001, whatever it makes, right? Whatever it does. Some other things to think about. And if we saw it in the article, increase claims, right? If there's a higher number of claims for some reason, natural disasters, you name it, like they said in 2023, 2022, insurance companies are going to increase the prices to offset these costs, right? Because they said they had to pay out $1.10 for every dollar. This is what they said, what they're reporting. But more severe accidents, more severe weather, natural disasters, whatever it could be, increase prices, right? Think about this. Think about if you're in a car and all of a sudden your car is more advanced technology-wise, and they're making more of this advanced technology. But guess what? This advanced technology costs more money. Maybe it could be a chip in a computer chip that goes into a car. If that computer chip goes from $100 to, let's say, $50 to $100, that's going to increase the cost of any repairs that deal with that piece of technology, and that's going to be sent over to us as consumers in higher premiums, right? Or how about this? Let me just give you this. This is what I'm learning all this in the last several weeks, but last month or two, 5 months, and especially today when I read a few articles. But in some cases, guys, you have insurers who may just raise the price. Think about it. Inflation is all around us, and guess what an insurance company may do? They just may want to increase their profitability, period, and use the opportunity of all these other factors that they could point to as a way of increasing their profits. It can happen. You talk about price gouging, sure. They could want to increase their profit margins during this time of instability with the prices, where they say, you know what, we just want to increase our profit, right? So what do we do right now? Because I always talk about these things, but I never want to leave a conversation without talking about some things that we can do as consumers, right? That's the bottom line. The bottom line is we can't control some of these, bunch of hurricanes in Florida, bunch of tornadoes in Oklahoma, bunch of mudslides and fires out in California, and all these things, a couple of hurricanes hitting Louisiana. We can't change any of those things. But the point is, what can we perhaps do? And I ran across another article that I thought was pretty important. I wanted to share with you guys real quick, but maybe I can't find it right now. Oh, I can find it. Here it is right here. If you're in America, some of you guys are in America. Let me share this with you because I thought this was an interesting, before I get to what we can do, because I want to leave you with some things that we can actually do. I want to share my screen with you real quick and point out this average homeowner cost of insurance per state in America, right? And you guys that are in America, you can check this out. What site is this on? This is on a Bankrate site. Average homeowners insurance cost in April 2024, right? So key insights. So let's just scroll right to the map. I'm a map guy. I like maps, right? To get a better sense of what your home policy might cost, it could help to review average home insurance rates in your state. Here we are down here. Here's a map of America, right? On this map, I can click in any, drag my deal over any state to see what the average premium for a homeowner's insurance policy on a $300,000 house is. And I found it interesting, and you guys can follow along with me here. California, $1,400. Texas, $4,000. Louisiana, $5,700. Mississippi, $4,200. Right? That's the average homeowner's insurance policy for a $300,000 home in that state. We can go up here to Georgia, $2,000. You can go up here to the Northeast. You have some that are really less expensive, like Maryland, not Maryland, I'm sorry, New Jersey, only $1,100 for a homeowner's policy covering a $300,000 home. That's the average. $1,100 in New Jersey. Whereas you come down here to, what did I say, Louisiana was $5,700. Right? What's the most expensive one? Florida, $5,700, $5,700. But you can go up to Wisconsin's only $1,100 a year average. Wyoming, $1,300. Idaho, $1,200. Oregon, only $1,000 for the average premium of a $300,000 home. That's interesting, right? I just thought I'd share that with you guys. It's on bank rate, and they got them broken down by state here as well. But I thought that was interesting, right? What are the 5 cheapest states for homeowners insurance? Vermont, only $799 per year in Vermont. New Hampshire, Delaware, Oregon, and Jersey. That's the average rate for a $300,000 dwelling in that state. Pretty neat. That's on Bankrate, guys. If you're looking for the article, maybe I'll leave a link to that in the description box below for you guys if you're interested in seeing what that is. So I just thought I like to share certain things like that with you guys. But let's talk about what we can do. What can we do? Guys, do me a favor. You got to hit the like button, right? Got to smash that like button for me. And then if you're not a subscriber to my channel, please consider subscribing, right? We put out lots and lots of great videos every other day or sometimes more, right? So today, if you think about it, just today, I put out a video, maybe a couple of hours ago. And the video was what to do with your paycheck. Do this paycheck routine every time you get paid. I gave you 4 things to do in order. Check out that video if you haven't checked it out already. I put it out just today here at Smart Money Bro. And if you're watching me on Instagram, LinkedIn, name it, Facebook, right? Whatever it may be, feel free to go over to YouTube and check out that most recent video. All right. I think we still got a good connection, don't we? Yep, we sure do. Let me see here. We need to go back to carbureted cars with AM radios. Too many distractions with all the technology in cars. Jack stand, Jeeper, I'm right with you. I like less technology in my cars. I want a 69 Mustang, stick shift, nothing. Give me an AM radio because that's all excuse me, that's all I really listen to when I'm in the car anyway is AM radio. I'm one of those nerds, right? So let's see here. I'm going to go back here and see what you guys are talking about in the chat. Let's see. Stop spending money. Yes, this is what we can do. I'm going to talk about what we can do, guys, because I want to leave you guys with some real practical things to think about in terms of insurance. Stop spending so much money and do this now. Let's see here. Good teaching, bro. Thanks, Jason. Good to have you here, Jason Brown. Good to have you. Stocks have been in the midst of a long bull market. Yep, they have, but there are signs that it's finally going to run out of steam. MJ, yes, the stock market, if you looked at indicators over the last two couple of months, there's some overvaluation happening in the stock market. It really is. So you guys that are invested in the stock market, hopefully it's all of you here, ETFs, index funds, individual stocks, understand that there's some over-evaluation, right? There's the Buffett way of looking at it. Then there's Morningstar. There's other places that have their different indicators. And yes, the stock market has been in a slight, not a real bubble, but just a little bit overpriced, okay? Let's see here. Stop spending. Live within your means. Yes, yes. I heard 50,000 new government jobs. Are they kidding me? Taxpayers pay for those jobs. Yes, Clint Perry. New government jobs. Okay. Somebody said wise federal governments are supposed to invest heavily into their own citizens first instead of flooding money for unnecessary wars. You saw some bills passed. There's a Ukraine Russia going on. There's the Israeli conflict going on between now Iran and Israel. There's a lot going on around the world. Absolutely. USAA firing a couple of hundred employees. That's an insurance company, I believe. Unfortunately, unemployment will be low because many people need a second job just to survive. Okay, true, true, true. Let's see here. Have you gotten into Bitcoin? No, I have not. Americans may need a second job because of invasion of illegal immigrants who are bringing the overall salaries and standards of living within you. Could be. Yep. We talked about that at length last week on this channel, the illegal immigration issue that's happening in America. Natty's Craft said, my home insurance doubled after I had a short 2-month lapse in coverage. Wow, doubled. Incredible. Mine's up 20%. I read that email at the beginning of this live, guys. 20%. Caught me off guard. I said, I got to do a little bit of research, but I wanted to have the conversation because I think a lot of people are suffering from higher insurance costs. Let's see here. We need to go back. He said that already. I live in Indiana. Donna, good to have you here. Try to show Delaware. Let me go back to it. I'll tell you what Delaware is real quick. The person that asked that, Delaware is so tiny up here. I don't know which one is Delaware. Rhode Island. There's Rhode Island. Let me see. Delaware, Connecticut, Vermont, New Hampshire, Maine. Delaware is not on the map anymore. No, just kidding. It's there somewhere, but where is it? Oh, it's right there. It's underneath New Jersey. Delaware, the average for that. Let me see. I got to bring it up wider. Let me see here. Okay. Delaware is 1,026. So Delaware is super duper cheap. Just to answer that question in the chat real quick. Super duper cheap. Road trips, listen to AM is a vibe. Absolutely. If stocks drop, that's when you buy more. So let's talk about it, guys. What can we do? Here's what we do. Several things to think about. Okay. First thing is this. If you have insurance on a car or a home, you've got to shop around, right? Wasn't that was a song, right? Shop around. You've got to shop around for better rates. That's the first thing you can do. If you look at your insurance premium, listen, if you look at your insurance premium and it's higher than what you thought it should be or what it looks like or what it could be or what it was a whole lot higher, you need to be looking for other insurance companies. When I had car insurance about 3 years ago, I had my car insurance and all my properties insured in the same place. And I had done that for 15 or 17 years, had all my all my rental properties, my homeowners insurance, my car. Guess what I discovered? I could pay about $200 less per month if I just took my car insurance out of that situation and moved it to somewhere else. That's what I did. So about 3 years ago, I moved my car insurance and shopped around for a better rate. You can shop around, right? Here's what some people say. Well, why would I shop around when if I go to this insurance company, they're looking at the same thing? Listen, most insurers consider the same factors when calculating your monthly premiums, but they weigh them differently, right? So as one major insurance company might weigh your driving record here, another and your age here, the other place may weigh your age here and your driver record here. I'm just using those really raw examples. But they're using the same factors, but they're weighing the factors differently. And the factor that this one weighs higher may be a factor that benefits you. But you don't know that because you've been stuck right here at this insurance company for 20 years because it's convenient. You know them and they know you, and you like the people when you every now and then, once a year, when you go into the office, you like them and how they reach out to you. But listen, shop around. Please shop around for a better rate. Homeowners insurance, automobile insurance, right? Get quotes from other people. based on your age, your driving record, some of the things that they specify. Shop around. This is the first thing that you got to do if you have a high insurance premium or an insurance premium that you don't like. Remember, all insurance companies have raised their rates. Some haven't. Some of them haven't raised their rates like others. That's why you got to shop around, right? The other thing you can do is get the right amount of coverage. What you needed in coverage 5 years ago, you may not need in coverage today. Maybe 5 years ago, you had a loan on a car, but guess what? Now all your cars are paid off and you got $30,000 in the bank. If something goes wrong, got an emergency fund, guess what? Now, maybe you just need to have liability on your cars. Maybe it's paid off. You don't have to have the full coverage. Some states do, some states don't, depending on where you live. But maybe the coverage changed over the last year, 5 years, 10 years, right? Check your deductibles. Maybe you don't need the $500 deductible now, making your monthly premiums $200 a month. Maybe you can go ahead and get that $1,500 deductible because you're in a different place that you were 3 or 4 or 5 years ago, right? When you needed to make sure that if something goes wrong, you only got $500, right? And so I got a $500 deductible, a low deductible, which makes my monthly premium a little bit higher. So now I got $20,000 in the bank. I don't need to have that low deductible. I can get a $2,000 deductible and making my insurance premium go from $300 a month down to $200 a month. Get the right coverage for you, right? Maybe you have to adjust your coverages because you're at a different point in your life right now with your personal finances, right? So you're shopping around. You're making sure you have the right coverage that fits you today, not the coverage that was good for you 10 years ago, right? And I just mentioned it earlier that helped for me 15 years ago, but maybe it'll help for you now is bundling your things up, right? All the different types of insurance you have, putting it all in one place may help you save some money. Just don't get stuck there. What happens with homeowners insurance and car insurance is we get stuck in the same insurance company with the same insurance guy or person or lady that we've been with for 20 years. Again, because of convenience, because we like them, they like me. I know where they're located. They've been around for a while, whatever. You got to get out of that frame of mind. You got to get into the frame of mind that I got to get the best rate. I don't care that I knew you, John. I known you. Listen, my mother had coverage from you. My grandmother had coverage from you, your father. I don't care about all that. I need to get the best rate. So if you can't find a way to get me the best rate, I'm out of here. That's the point you got to get to with your insurance company. And some folks are there, some folks are not. Somebody said, let's see here, Delaware. That's the bill. Question: why do I get credit card interest charge if I'm paying it off? That's a question for your credit card company. I'm not sure. I don't know 100% why that would happen. Maybe you're not paying it off in time, right, before the bill comes out. Let's see. Good question, though. I just can't answer that 100%. So I'm sorry. Let's see here. Maybe somebody in the chat can answer. If you guys are credit card gurus in the chat. Remember, I don't have credit cards. Vanessa, yes, you're welcome. Let's see. It's also cheaper to pay for the premium up front because they will charge you a service fee to do a payment plan. Boss Life, you're right. True. Pay it if you can pay it 6 months, whatever they charge you, pay it 6 months. You pay that monthly, they got to charge you for that paperwork they send to you or for that email they send you, whatever they send you, right? Let's see. So another thing, the obvious elephant in the room when it comes to what you can do. Do this now. This is why I labeled this one the hidden cost of high inflation. What you should do, stop spending money and do this now, right? The obvious is this. You got to plan ahead a little bit. Don't buy items without first knowing and considering the cost of insurance, right? You're trying to go out and buy that new car, right? Maybe you want to finance the new car, which I don't suggest you finance it, but maybe you do finance it. And it's a 2023 or 2022 sort of newer car, right? Maybe it's a 2-door, maybe it's a sporty version. The insurance is going to be higher. than when you had that 2013 Kia, four-door. You know, when you had that Astro van, insurance was $100 a month. Now you just went out and got that newer car, insurance is going to be $350 a month. I'm just using numbers. But you got to think about that before you go make a purchase. Think about it. Same thing if you're buying a house, right? Yeah, you're thinking about the payment, but what about the insurance? You got to make that payment on a regular basis as well, right? So does the cost of insurance ever go down? Right? If you've kept your coverage with a company for several years, you receive maybe there's special discounts that are available. This is something else you should do right now in terms of your insurance companies. Contact them. Ask them, are there special discounts I can get right now to help bring my policy down? Because some insurers, they'll reduce your premiums, if you stay with them for 3 to 5 years or whatever it may be, right? Or they may drop your insurance premiums by, 10% if you remain a policyholder for 10 years, 5 years, right? Of course, we know in terms of car insurance, you get a little older, depending on where you live, you have a good record of driving, all those things will help you out as well, right? But this is the conversation that we need to be having as consumers. What can we do to reduce our insurance premiums? Because that's a way to save money. I don't know about you guys, but when you look at your budget, you got car insurance. We know health insurance might come out of your check every month, every time you get paid, whatever. You got car insurance. Hopefully you have some life insurance, right? You have these different things that you want to have to cover yourself, right? And these things become a part of your monthly bill quite often, right? Interesting things to think about. Somebody said, if you want to get, let's see here, question. How's your confidence in treasuries? Selling an inherited house and want some of the risk off. I was thinking about treasuries for some of it. I don't invest in treasuries really. I do have I think I have a couple of ETFs that are bond ETFs. At Vanguard, I think I have BLV, which I'm not really happy with it, but it's a bond ETF. But if you're older and you don't want the volatility of the stock market, that's fine if you feel comfortable with bonds. I'm not a bond guy. So, I'm not big on treasuries. But if you want to do it, everybody's different, right? Everybody's different. USSA since 2005, premiums go up every year, but they've always come through for me. Fantastic. I don't have USAA just yet. Let's see. They charge you insurance. Let's see. Vanessa, Jared's explaining to Vanessa. Thank you, Jared, for helping her out with that question. I appreciate that. Somebody said, I feel like life insurance is a scam. I believe in life insurance. That's one of the pieces of insurance that I always tell people when you're building a firm foundation with your money, go out and have some life insurance. And I like term life insurance. I like term life insurance. I think I'm gonna have to do a video about life insurance. I'm a term life guy, okay? Because I want you to eventually be self-insured where you don't need any insurance. You might want to keep it around just for the heck of it, right? But term insurance is less expensive, better for you in a lot of ways. I need to do a whole live about insurance, right? Let's see here. 5%, not 10%. Boom. Okay, Vanessa got some help from Clint. Again, thank you, Clint. Thank you, Zach, for helping her out. Listen, guys, talk to me. Tell me in the chat. Let's do a quick poll. Has your insurance premiums on your home and your life, sorry, not home and your car insurance or auto insurance, has it gone up? Let me know in the chat below, guys. Just kidding. That's water. That's what you do like if you had like that was something beyond water. It's just water, but I like to joke like that. So let me know in the chat, guys. Has your premiums gone up? Have you experienced this, right? And if you have a question, drop a Q in the chat and I'll answer the question for you guys. Let's see. Home went up 1,000 per quarter. Mark, is that right? Am I seeing that right? I got my contacts in. 1,000 per quarter? That seems pretty high, Mark, unless you live in couple $1 million home. Uh, Donna said, yes, both have gone up. Yes, absolutely. So, and then Tech Basic said, yes, my premiums are up. Need a new car insurance company. You need to be shopping around, Tech Basics. Shop around. See what's out there. Somebody said, yes, home and auto shopped around. Cheaper to stay with USAA. USAA is getting a lot of publicity right now in the chat, guys. You might check out USAA. Looks like several people are happy with it. Let's see. Home, car, nope, due to my age and where I live. Fantastic, Nigel. Fantastic. Let's see here. Sunset on the Ocean said yes. Kimmy Apple said yes. Mine even went up with USAA. My home insurance went up, but the value of the house has doubled. That's another issue. We know that as the prices of homes go up, the insurance will go up as well. And the insurance company wants to make sure that, hey, we were covering you for that $200,000 house, but now that house is worth $300,000. So, hey, your premium's going to go up. So that happens as well. We know that real estate has really gone up in the past couple of years as well. So most people in the chat identify with this topic. Natty's Craft said, yes, both have gone up in the Dallas area, DFW. Bundling home and car does help, Kathy, but just don't get too comfortable with that. I had mine bundled for 15 years. I got real comfortable, and by the time I looked around, I could still, even though it was bundled, still be saving more money in terms of car insurance somewhere else. So just don't get too comfortable with that after so long. Escrow was, oh, you're saying escrow was 1,000 short, but your escrow, Mark, includes your homeowner's insurance and your taxes, though, right? So perhaps your taxes was a large chunk of that extra 1K per quarter. Let's see. USAA is for military personnel. Okay, cool. No life insurance paid for cremation already. Okay, Jackie. I'm not mad at you, Jackie. You got a plan. As long as you got a plan that works for you, fantastic. Congratulations, Jackie. Because I know one thing, guys, and I talk about it all the time on this channel. Personal finance is personal. What Jackie does may not be what I do, may not be what Clint does, but that's okay. It works for Jackie. Let's see, Clint, do you think being in the same insurance company for decades is beneficial? Could be. That's a question for Clint. I'll let Clint answer that. How do you feel about being self-insured with homeowner insurance by investing in stocks? So ask that question in a different way, Larry. How do I feel about being you put a question mark after self, insured with homeowners insurance? Yeah, I understand what you're saying. Yeah. Homeowners insurance, cool. By investing in stocks. All right. I guess it works. If it works, if it works for you and you have $500,000, $200,000 in the stock market and you want to use that in lieu of, that's cool. Somebody said, what's the best car insurance? It depends on a lot of factors, Vanessa. Really, your age, like we said earlier, your age, your location, what type of car you have. I mean, there's all different types of things that will come into play. And I would imagine that it's different for different, when all of those factors change, the best car insurance can be different depending on who you're with. And then wherever you go for car insurance, there's different levels, right? You can add all kind of things to your car insurance, right? So there's this level, there's this level, there's this level. At every place you go, I don't care if you go to, name them, Geico, USAA, Farmers, State Farm, whatever you go to, right? There's different levels. So that's really depends on a lot of different factors, Vanessa. Somebody said, when it comes to insurance, you get what you pay for. So I appreciate that. You guys, listen, you guys have, I have one of the smartest group of people that are on YouTube. I really believe that I've attracted some very, very intelligent people. I don't know if it's by any doing of me, but we have some intelligent conversation in the chat. If you're watching this from the beginning, you want to rewind, catch the beginning, you need to be also checking out the chat because there's a lot of good information that flows through and people answer questions in the chat because, again, we got really, really smart people that watch these videos, my lives. And so I appreciate you guys that are in the chat, helping out other people in the chat get what they need or answer their questions because I can't get to all of them. And guess what? I don't know everything, right? There's some areas, some of you guys know more about these areas than I know. So I appreciate you guys more than you know for doing that in the chat and keeping the chat an educational place, not just a place where people can come in and get bots coming in and acting crazy and saying weird stuff, and I have to get them out of here. We don't have a lot of that when I do these type of lives. Now, when I get on my do the vertical lives, oh man, whoo, we got some crazies that come in, but I always get them out real quick, right? Nigel, thank you. I appreciate that, Nigel. Smart Money Bro, I'm starting over, and your $10,000 in a year vid gives me hope. Jared or Gerard, you can do it. You can save up your emergency fund. I always talk about and really hone in on having a firm foundation with your money. And so part of that $10,000, that video I did was about trying to develop an emergency fund quickly, right? Trying to get that emergency done quickly so you can move on to bigger and better things in terms of investing your money. Jared, I got you. Vid. Nowadays, since people are not insured, you have to make sure you have enough coverage, especially if it's hard to find your car parts. Tatiana, excellent point. True. You may have a 2023 Lexus, right? You may not want to go down to just liability only on your Lexus. You might want to have full coverage for all types of different problems and issues that come up. The kicker is this, guys. When it comes to insurance, homeowners, auto insurance, I got an email from my insurance company because I've been with them a long time and they want to keep me, right? They don't want me saying, man, I should shop around. But guess what? I should shop around. Shop around for better rates. Right? When you see your premiums go up, see what else is out there. Right? And then when you do it, every couple of years, you need to make sure you're getting the right amount of coverage for you and your personal situation at the moment, right now. If you got the same insurance company, not company, but the same coverage of insurance on all your insurance products that you have that you had 10 years ago when you had kids in the house and now the kids are gone, you need to be checking those policies and getting the right amount of coverage for you today, right? Very important. And it's easy to do that, guys. We just get in that habit of paying that $150 a month, $200 a month. We don't think about it over the course of a year, 2 years, 3 years. Shopping around for insurance becomes a pain. But guess what? You can save money every single month. Even if it's just dropping $100 off of your total. If you look at your car, your home, and you drop a total of $100 off your payments a month, that can do wonders for you if you're trying to pay off debt or you're trying to save up your. Listen, you might be able to go and change your insurance coverage and might be able to drop $200 or $300 off your monthly cost. And if you can do that, that's $200 or $300 more dollars that you can be putting towards an S&P 500 ETF. That's $200 or $300 more that can help you get to that $10,000 emergency fund goal that you have quicker. $200 a month is $2,500, $2,400 a year. In 2 years, that's $5,000. That's good money, right? So we got to shop around. We got to get the right coverage. And we also have to make sure we plan ahead and make sure that, we don't get stuck in a plan for too long without shopping around, right? Guys, in the in the description box on YouTube, check out my guys and my folks over at Mint Mobile. If you're saying to yourself, look, yeah, I got a lot of insurance, but guess what? I'm also paying too doggone much money for my cell phone plan, my wireless plan. Too much. My buddy over here, he's paying. Check out Mint Mobile. Inexpensive. That's what this channel is all about, trying to save you some money, not only on your insurance, but also on your cell phone bill, right? They're in the description box below. If you haven't gotten it already, guys, go over to the description box on YouTube and get your free ebook, 24 Laws of Money. Free ebook, 24 Laws of Money. Because it starts up here. Everything you do with money starts up here in your brain, right? Let's see. Somebody said, put that 10,000 in an HYSA. Yes. High yield savings account. We had a really good live about a month ago, 4 weeks ago, on high yield savings accounts. We hit those real hard. What to look for, what not to look for. You might want to go back through my videos and check that out. From KC, born and raised in Kansas City, Kansas. Absolutely. Still drive my 2002 Alero. Man, Alero, I don't even know who makes Alero. That's how old that brand is. Let's see. Smart Money Crew hashtag. Smart Money Bro. If you want to follow me on YouTube, on Twitter, on IG, I'm Smart Money Bro on those places too. I'm looking to build up my IG a little bit, and I haven't really focused on it because I've been so focused on you guys over here at YouTube. But feel free to join me over on IG. Feel free to send me a DM over on IG. I do answer those, and I check that quite a bit, guys. Let's see. With Smart Money Crew, Nigel. Absolutely. I got a great group of people, guys. Oh, it's Oldsmobile. Wow, Alero. I knew I hadn't seen it in a long time, but I seen it. Back in 99, one of my favorite jobs of all time, guys. So you know, let me share this with you guys. One of my favorite jobs of all time that I've ever worked was when I worked for 2 years at Jiffy Lube. Loved it. I worked at Jiffy Lube in 1990 to 1992. I worked at Jiffy Lube. Lower Bay, dropping that oil, dropping that transmission fluid, changing filters, coming up top, doing everything up top. Loved it. One of my favorite jobs of all time was working at Jiffy Lube. Hey, I enjoyed it. Like working my hands. And I like dropping that oil, getting dirty, right? Let's see here. I started with Susie Orman back in 2003. Now I'm here with you, wealthy, but still learning. Jackie, I appreciate you being here. I appreciate you being here. I started with Crown Finances. What is it? Crown something. But I started with them back in early 2000s, like 99 or 2000. Then, of course, I was on Carlton Sheets. And then I was on, used to listen to Susie Orman a long time ago, years ago. But yeah, now we're here, Jackie, 20 years later, and we're still rolling. Glad to have you, Jackie. Listen, I'm not going to hold you guys. I just wanted to share with you the hidden cost of inflation, insurance, and say, listen, stop spending so much money and start doing these things that we talked about towards the end of the video to make sure that you're saving money on insurance and you're not getting got by the insurance companies. Also, I want to give a shout out to this. Pay attention to what's happening with the Fed. We talked about briefly on here about the Fed and how they infuse the economy with money, right, to get us to spend, quantitative easing, and then they pull that money out of the economy and make it harder and harder to borrow money, right, by raising interest rates, quantitative tightening. So we talked about that a little bit, but I want you to pay attention to what's going on when they decide to cut rates or not cut rates. They had a meeting coming up. I'm almost 100% sure they won't be cutting rates. 2 weeks ago, I said, listen, guys, the Fed should not cut rates because inflation was sticking around longer than we all thought about it. Just a few days ago, the Fed chair came out and said, you know what? He gave the indication that it's going to be a while before they cut rates because of sticky inflation sticking around, right? So just keep that in mind, guys. Be looking for that over the next week and a half, maybe 10 days from now or so. They're going to have their meeting and be listening and looking and paying attention. We'll talk about it on this channel because on this channel, we're trying to be informed consumers, right? Informed investors in the stock market. We want to be informed. We don't just want to turn to Bloomberg News and have them talk over our head for 2 or 3 minutes. And wow, look at all those numbers going across the ticker symbol. No, we want to know what's going on. We want to know what's happening. We want to be able to understand the lingo. When they say, you know, what index funds, ETF, what are we talking about? Stocks, right? Bull market, bear market. We want to know these things because that's going to make us better investors and better consumers. So stop spending so much money on insurance and do these things now. It's the hidden cost of inflation, the trickle down of inflation. I appreciate you guys. Smash that like button before you leave here. Don't leave here without hitting that like button. Please share the link to this video with a friend or family member, somebody that you like. Share it with somebody that needs to hear this. Maybe wants to hear, maybe wants to learn something different about money and don't want to just get a little quick 3-minute splash video, 5-10 minute. Listen, on this channel, I got the 8-minute, 10-minute splash videos for you also. But I really like to have these conversations where we dig into a topic a little more deeper. I can share my screen. You guys can help each other out in the chat. That's what we're building. My goal has always been to build a community of common sense principles and folks that believe in regular common sense stuff to reach their financial freedom, to reach their financial goals, right? Not fancy, not flashy. You're not going to see me next to a Ferrari or with big old, big Rolex watches on. None of that. It don't take all that to be good with money. It doesn't take all that to be a 7-figure net worth person or to be a millionaire or to be wealthy or have wealth or be building wealth. It don't take all that, right? What it takes is just some real common sense principles. And I appreciate you guys for hanging in there with me and wanting to be a part of this journey, right? If you need some help, if you need some encouragement, if you need some motivation, feel free to reach out to me. My contact information is below in the description box on YouTube. I don't mind helping folks all day long. If you join this channel, you get a chance to talk to me about your personal financial situation for 20 to 30 minutes once a month. So we can dig into your situation. And I could be your mentor. I could be that person that holds you accountable, right? Just had a conversation yesterday with some folks, a couple. And as I was saying, I'm the same person when I have that conversation that you see right here. It doesn't change. I'm going to give it to you straight, flat out. I'm going to tell you what you need to hear, not necessarily what you may want to hear, but I'm going to be nice about it and respectful about it because I care about you getting better with your money. Hey, as I always say, guys, I appreciate you being here with me. We're going to come on live again in 2 days on Saturday at 11 o'clock a.m. Central Standard Time. Please continue to support the channel. If you support, the best way to support the channel, smash the like button and share the video with somebody. All right? Hey, listen, as I always say, guys, I appreciate you more than you know. Thank you so much for spending an hour and 22 minutes with me. And the best person who's always going to take care of the old you is the young you. Guys, take good care of yourself. And also, you want to take care of other people. Until the next video, peace.